Hi there, RES friends and family. Surely you have heard us talk about assumable loans before. It's something I'm quite passionate about because, as you are aware, the interest rates have gone up significantly. We're hovering around the 7% mark right now, and I don't think that's going to change significantly anytime in the near future. So we all would love to still have the 2.5–3% interest rates on our next home purchase, and there is the possibility of being able to do that. So I get quite excited about that. And I wanted to bring to you some fresh information on what is out there, just to kind of pique your interest a little bit if this is something that you might consider. So looking at the houses that are being promoted with assumable loans. Now I say it that way because it doesn't mean that's all of the homes available for assumption, but the ones that are listed and are marked as assumable, I've pulled 38 options that you can look at in the link below. And the 38 options are between Citrus County and Marion County. There's a lot more in Marion County than what we're showing in Citrus, but please remember that this is just what's being published as assumable. There are other opportunities out there. So VA, FHA, and USDA are all automatically assumable loans. Now there are some considerations that you do want to bear in mind, and a couple of them being, one, with VA loans, oftentimes sellers want to offer assumption to veterans only because there are some things that the existing veteran with the loan has to account for if they were to allow a non-veteran to assume the loan. We can talk about that more if you're curious about what those details are, but just something to be aware of. If you're not a veteran and you're seeing an assumable VA loan, you need to inquire a little bit further to whether or not the seller is open to a non-veteran assuming. They can allow it, but they may not be willing to do it. And then the other one, the biggest one, is going to be the difference between the sale price and the loan value is going to need to be brought to closing as cash. It would be similar to a down payment on a loan in a lot of cases, but it's probably more in most scenarios than what you would be putting down on your mortgage. So if you're going to do an assumption, you really need to have a nice amount of liquidity available to you. And in this grouping that I have linked below, I checked on the balances versus the list prices, and I was looking at anything from 150,000 gap to 300,000 gap, and that can be higher as well. But in a few that I sampled, that's what you're looking at. So you do have to have a significant amount of cash on hand to make this happen, but the financial benefits of it can be tremendous. So just something to really keep in mind if you'd like to see more specific numbers on your particular scenario, how this might increase your buying power if you were to use a loan assumption instead of going with a new loan at a 6.5 to 7+%. I would be happy to run those figures for you, and it is quite interesting to see how it changes your financial ability for what you can purchase. And in an environment like this where we have rising inventory and buyers have more leverage, I think it's a great tool to look at and to be considering as a buyer. And then as a seller, if you have an assumable loan, make sure you're marketing it that way, because that can be a game changer for your sale. So if you have any questions on this strategy, we're always here to help. We love to talk to you and strategize with you. So give us a call, 352-794-1426. I'm Ruth Squires with RES Luxury Group of eXp Realty, and RES Luxury Group brings you white glove service and red carpet treatment because your satisfaction is our guarantee. Talk to you soon.